Good afternoon and happy Thursday, everybody. It's Scott with River Place Capital. It's Thursday, November the 7th, and wanted to just spend some time to tell you what's kind of happening this past week in the markets, what we're seeing, and what we kind of see moving forward. What we talked about a lot last week was we talked about earnings, and we talked about moving into this earnings season that there were fears of global slowdown, a slowdown in the United States, and a possible recession moving into 2020. However, most companies in the S&P 500 have reported their earnings, and over 75% of those companies have either met the expectations or they've exceeded their expectations and have even guided up, and revenues are up. And what we are seeing in the economy overall is what's kind of been lagging in our economy has been the manufacturing sector. The consumer is strong and remains to be very, very strong, and we are seeing that in all the economic data that we have. However, a lot of analysts and a lot of people in the markets believe that we have really started to maybe possibly hit a bottom or a trough, as they would say, in the manufacturing sector, and that we are going to start to see some upwards momentum. And one of the interesting things that we've seen as we are now, as we speak today, at intraday all-time highs on the S&P 500, the NASDAQ, and the Dow Jones Industrial, is we really have started to see a shift in leadership in the stock market. For the past 10 years, you've really seen a lot of these high-growth names, your FANG stocks, as they would say, your Facebook, Apple, Amazon, Netflix, and Google really lead the markets upwards. And what you are really starting to see with this earnings season is these companies that are reporting negative earnings or aren't providing an actual return are actually kind of getting hammered and beaten down, where sectors and companies that are in the value sector that are providing returns and earnings to their clients, you're starting to see a lot of money flow into those types of companies, and you're seeing some sector rotation from the growth into value, and it looks like we may start to see some market changing and some market leadership change. Now, also today, you did see headlines from the Chinese that came out and said if there is a deal made between the United States and China on phase one, that we may phase out some of the tariffs that have been implemented on both the Chinese goods and the United States goods. And so that's really what today is lifting the market higher, is off of that news. So with good earnings, the fear of a recession for 2020 has become very muted, and if anything has been revised up, that we may see upward momentum in GDP growth, upward momentum in the manufacturing sector. So all of this leads to the markets moving higher. Again, like I said last week, it's not going to be a straight line straight up. The market does have some ebb and flows, but we believe all of this put together gives us an opportunity for the market to move higher. As always, if you have any questions about what's going on in the markets, feel free to give us a call at any time. Check us out online at www.riverplacecapital.com or shoot us a message here on Facebook. And thank you guys so much, and I hope you all have a wonderful weekend.